All right, today's Tuesday Tidbit is, how does my credit impact my ability to get a loan? I love that question. So credit is kind of viewed in a couple of different ways. There's your credit score, and then on a different level, it is also kind of graded pass fail. If you do not meet the requirements, you may simply not be able to get a loan at all. So within the hierarchy of loan options, the best loan option is conventional. Again, those are backed by Fannie Mae and Freddie Mac. They're government-sponsored enterprises. Second bucket is what we call government loans. FHA, VA, USDA, actually truly Uncle Sam's money. And then the third bucket is portfolio loans. So in this case, it'd be Elevation's credit union's own money that we are lending out. With conventional loans, they typically require a 680 credit score. So 680 is typically what they require. They'll go all the way down to a 620, but you really have to have compensating factors. Large down payments, low debt to income ratio, things like that may make it so that they are more inclined to do a 620 credit score when otherwise they normally wouldn't. Government loans, VA, FHA, those are constantly changing in regards to what the credit score needs to be. But right now, 620 is about what they'll go down to. That's pretty standard kind of across the industry for FHA or VA loans. They want to see a 620 credit score. So they have more, again, wiggle room when it comes to a credit score. The third option, portfolio loan, is really up to the institution themselves. They get to decide how much they'll lend out, what the terms are, and what credit score they're going to require. I once had a member who had a credit score of 400. No other institution would even look at her, but she was divorced, and it was her ex's responsibility to pay the liabilities, to pay the credit cards, the car loans, all that stuff. Per the divorce documents, it said very clearly, black and white, he's responsible for these debts, and he didn't pay them. He was constantly skipping payments and bringing down her credit score. Not very fair. Elevation, since it was a portfolio loan, that third bucket, we were able to take a little bit more of a common sense approach and say, okay, great. This makes logical sense to do for Elevations, for the member, for our membership. We're going to go ahead and take on that additional risk, and we're not going to penalize her for the credit score because it's really, truly not her fault. So that's kind of what you're looking at. Conventional, typically a 680. Government loans down to a 620, and then portfolio loans really up to the institution. Case by case basis, we will review basically any situation at any case. So that's how your credit score impacts things. Now, most institutions will say, look, if you don't have a 620, you did not pass. Unfortunately, we need to get your credit score up before you're going to have any viable options. Hope that helps. See you next Tuesday.